Oil prices are in a higher trading range, with West Texas Intermediate just under $69 a barrel and Brent crude at just under $71 a barrel when I'm recording the audio for this short little video. My friend trader Aaron Basil has shown in technical analysis that there's going to be some overhead resistance, at least in the short term, for oil prices, although he is going to be accumulating on dips, expecting higher oil prices in the years to come. What we're seeing, though, recently with this Wall Street Journal article that just came out is that a lot of professional traders are making big bets on much higher oil prices. In fact, triple-digit oil, $100 per barrel oil in less than 2 years by the end of 2022. So call options, leverage call options on the December 2022 $100 oil contract are at record highs. A lot of the policy decisions by the Biden administration and also by environmental activist investors are starting to make finding new oil and natural gas very, very difficult. Now, the Biden administration has already pulled oil and gas leases both in Alaska, in Anwar, I believe, and elsewhere, and also in the normal shale oil drilling areas. Now, a lot of these shale oil companies saw this coming beforehand, before the November elections, and stockpiled leases and permits ahead of time. However, any additional permitting and pipeline adding will be very, very difficult, as a lot of ESG investors, environmentalists, politicians, bureaucrats want to stop oil companies, whether that's Royal Dutch Shell, ExxonMobil, many of the other large and small ones, from finding new oil and natural gas supply. But unfortunately, if you look at the history of energy in the modern era, it normally takes at least 40 years for a successful transition from one major form of energy to another. So they're trying to do this at a ridiculous pace. I don't think it's going to work out very well. I think it's a train wreck. I think it's going to be a disaster. And the higher oil prices go, especially here in the US in 2007, when oil prices went above $130 a barrel and gasoline prices skyrocketed, that created a tax on the real economy. That hurt consumer discretionary income. It took a lot of discretionary income out of people's pocketbooks. People spent more money on fuel. It put higher cost of goods sold into the supply chain. It put higher costs into mining. It put higher costs into agriculture. It put higher costs into so many different things that are made with petroleum products, whether that's plastics, fertilizers, you pretty much name it. Tons of different things at the grocery store and elsewhere. So if oil prices do get to $100 a barrel, or considerably higher than 100, maybe 120, 130, maybe even 150, that's going to potentially start to crash the economy too, the real economy, not the asset markets, because the asset markets are so divorced from reality right now. But that will cause even more pain for consumers. So if you want to read more about this, I'll attach a link to the Wall Street Journal article. There's one other article I'll put in the information and description section talking about how these environmental activists, these ESG investors, are joining the board of directors for companies like Royal Dutch Shell, ExxonMobil, and others, and trying to stop them from finding new oil and natural gas supply. This is not going to end well if this continues, and in the coming years, the real economy could be grinding to even more of a halt than it is now if the policymakers and environmental activists get their way. I think the Financial Times even ran a story about this in the last couple weeks, how oil and natural gas companies should stop looking for new supply. Pretty ridiculous if you ask me. Finally, if you like content like this and want even more in-depth research, content, information, and analysis, a lot more than I could put in these short little free videos, please sign up for my Patreon. It's only $5 a month. There is way over 150 articles, charts, and audio podcasts behind the paywall, including 8 new articles in the last 4 or so weeks that are in-depth on a lot of interesting topics. And there's also a new 45-minute long audio interview with Sandstorm Gold CEO Nolan Watson that is exclusive for patrons. I'm honestly not sure when I'm going to release that interview for free, if at all. If I do release it for free, I'll put a disclaimer in front saying the day it was recorded, although I'm sure in the comment section the cheapskates are still going to complain why I didn't release it for free as soon as it came out. But for me to pay my bills, because Google AdWords revenues running on these YouTube videos do not pay my bills, I have to have patrons. So if you want to help keep the free content free, so it all doesn't end up behind a paywall, please take a look at my Patreon. It's only $5 a month. It's one of the best deals out there on the internet in the space. for the type of research that you get. No one charges so little. It's normally $10, $20, $30 or more per month. No one's charging $5 a month, as far as I know, for the quality of the content. So the bottom line is that there's very, very big bets over the next 18 months that oil prices by the end of December 2022 will be around $100 per barrel. And we're even seeing, according to this Wall Street Journal article, that a lot of professional money managers are even selling puts. That's how confident they are. They're making leverage bets on a higher oil price and selling puts. So this is something we'll keep monitoring. However, if oil prices do go high enough and gasoline prices do go high enough, they will act as a big, big tax on the real economy, more than the taxes the politicians and bureaucrats are already talking about now, and could create even further damage to the real economy.